Hi friends, a lot is happening in the space of gold ETFs. For example, recently Grow Mutual Fund launched its gold ETF and it is available until 18th of October. Point number 2, investments in gold ETF by retail people in the last few years have gone up very high, dramatically high. For example, have a look at this data and you will see that in 2023, number of folios in gold ETFs were 48 lakhs. Pre-COVID, in 2019, for example, it used to be at around 3.9 lakhs. It has gone up almost 15 to 16 times in the last couple of years is what we can see as per the data. Point number 3, more interestingly, 98.44% of gold ETF folios are owned by retail people like you and me. So gold ETFs have become a very popular method of investing in gold by retail people like you and me. Also, if you look at how much of gold ETFs are being traded on exchange, you will see this data by 2023, almost 9,000 crores worth of gold ETFs were traded. Again, pre-COVID, this data used to be less than 2,000 crores. So almost 4 times growth by value is what we can see in the last 3 to 4 years. Now, by looking at this data, you may have a lot of questions. For example, why there is so much of demand of gold ETFs right now? Should you take positions in gold ETF or not? How does exactly gold ETFs work? How to buy, how to sell them? What are the capital gain tax related complications or implications in gold ETFs? All of that I will clarify in this one single video. People who don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. I also speak about ETFs, stocks, mutual funds and various other assets on my YouTube member community. If you're not a member, consider subscribing. I post in-depth analysis of various assets almost on a daily basis. The feedback has been excellent. Go to my channel, simply press on join button and be my guest. So the first crucial question is that why there is such a huge demand for gold ETFs recently, and should you take any positions in gold ETFs or not? For this, have a look at this data. You will see that in the last 5 years, gold has delivered impressive 14.5% annual returns. This is very impressive returns in the last 5 years. But more importantly, gold is considered a diversifier in your portfolio. Have a look at this last 10 years of data. You will see the gold is represented by yellow line and equities are represented by green line. There is a strong inverse relation between gold and equity. Whenever equities go up, gold comes down, and whenever equities come down, gold goes up. For example, here during the COVID period, when equities fell down, gold went up. Have a look at here 2014-15, exactly the similar story. When equities went up, gold came down. So gold acts as a very good hedge in your portfolio. But you may have a question here that, Rahul, if that's the case, why would I consider investing in gold ETF? Why not other means of gold investments? So for that, I need to run you through a number of features that gold ETFs deliver, which many other gold options are not able to deliver. Please listen to this commentary very carefully. You are going to learn a lot. So with that, feature number 1 is that in gold ETFs, there is no lock-in period, and more importantly, you can sell it anytime you like and you get your money back instantly. This is because gold ETFs are exactly like stocks. They are traded on the exchange. Let's say at 1 p.m. you decide to sell your gold ETF because you need money. You go onto the exchange and sell it off. Within seconds, you are going to get your money back. Now compare this with sovereign gold bond, for example. There has been a limitation that you can't really sell off sovereign gold bond until it finishes the maturity period. Now you may say that, Rahul, that's not correct. I may go to the secondary market and sell my sovereign gold bond. But please remember, if you're going to secondary market to sell your sovereign gold bond, you are likely to sell it at a lower price than the prevailing gold prices. Likelihood is that you are going to lose some money there, but that is not the case in gold ETFs. Secondly, if you talk about the physical gold, if you go and sell your physical gold in the market, you're not likely to get the same price that is the prevailing buy price of gold. And that is why gold ETFs are very different from many other forms of gold investments. More importantly, when you use gold as a hedge, it also allows you to maneuver your money between stocks and gold instantly. So if you want to sell gold and want to put your money in stocks, you can instantly sell your gold ETF, put the money into stocks. If you want to sell your stocks and want to put that money into gold, you can do that very quickly. Sell your stocks and go to exchange and buy gold ETFs anytime you like during the trading hours. Feature number 2 is when you invest in gold ETFs, you are investing in 99.5% purity of gold without needing to worry about it. For example, let's say you invest 10,000 rupees in a gold ETF. For example, in let's say Grow ETF that is right now in the NFO stage. Now what Grow AMC will do is they will go and use these funds to buy gold of the purity of 99.5%. Not only they will buy it, they will store it, they will insure it, taking all the hassles away from you. So So essentially, by investing in gold ETFs, you no longer need to worry about the purity of the gold. In fact, AMC will take care of everything. Also, please note that gold ETFs are regulated by SEBI, so a regular audit of the physical gold kept by AMC is mandatory. Feature number 3 is that you can invest as low as 500 rupees in gold ETFs. And that's why I say that this is the most flexible way of buying gold, because you can invest as low as 500 rupees. So in a particular month, let's say you are able to only save 500 rupees for your gold investments. Gold ETFs are still there for you to go and invest your money. That flexibility is not there in sovereign gold bond, for example, or for that matter in physical gold as well. But let me tell you even more interesting factor about gold ETF. You can place limit orders in gold ETFs exactly like stocks. Now, what are limit orders? When you go and buy stock, and let's say the price is 100 rupees, but you only want to buy this stock when the price drops to 95 rupees, what you do is you place a limit order to say that execute my order only if the price comes down to 95 rupees. Exactly this is how gold ETFs also work. And if you want to place a limit order during the day to say that if the gold prices come down by, I don't know, 0.5%, 1%, then only execute my order, that flexibility is there in gold ETF. All of these flexibilities are not there in many other means of gold buying options, such as physical gold or, for example, sovereign gold bond. Now, next $1 million question you may have is, Rahul, how do ETFs, gold ETFs, generate returns? So let me take a practical example, and this is extremely important because nobody is explaining these type of concepts. Let's say there are 10 investors and each of them invest 100 rupees, let's say in Grow Gold ETF. So the total fund value for Grow Gold ETF will be how much? 8,000 rupees. Now, if the current NAV of the ETF is, let's say, 80 rupees per unit, then each investor will get 800 divided by 80, that is 10 units per investor. By the way, these numbers are just examples. The exact numbers of NAV may vary. Now, let's say after 3 years, the gold price is double. So essentially, the fund value has gone up from 8,000 rupees to 16,000 rupees. Now, after 3 years, if we calculate the NAV calculation will be something like this: 16,000 divided by 100, which is 160 rupees, minus the expense ratio for the last 3 years, because that is the money that AMC is used to run their funds. But essentially, the NAV will be somewhere around 160 rupees per unit. So after 3 years, let's say one of the investor out of those 10 investors want to redeem their ETFs. When they go to exchange, they are likely to see the price of per unit around 160 rupees per unit. See, the price may not be exactly 160 rupees per unit because of course there is a demand and supply of the ETF, then there is a tracking error, various other parameters. But the broader concept you need to understand is that for investor 1, he or she bought it at a price of around 80 rupees NAV, and after 3 years the NAV has gone up to around 160 rupees, meaning the money has doubled because it has tracked the gold prices. And this brings me to a very, very important concept that no matter which AMC you go with, the returns of the gold ETFs are likely to be more or less similar because they are essentially tracking the gold prices. And I really hope that this entire working of gold ETFs is very, very clear to you, because you need to really understand how gold ETFs appreciate in value, therefore giving handsome returns if the gold prices go up. If the gold prices come down, then the NAV will come down appropriately. But we know that over a longer period of time, 5 years, 7 years, 8 years, gold prices generally have gone up. Of course, I can't give you a guarantee that whether the gold prices will go up or not, but you need to understand this concept. Next question you may have is that, Rahul, you spoke about the expense ratio. How much is the expense ratio in case of the gold ETFs, and are there any other charges when buying and selling gold ETFs? So the good news is that expense ratio in case of gold ETFs is capped to maximum 1%. And in my view, that is a very, very efficient way of investing in gold ETFs, because you're not paying any making charges. You're not paying for storage cost of gold. You're not need to worry about the gold purity, and also you're getting hassle-free buying and selling on the exchange. Now, the expense ratio could vary from AMC to AMC, and also it could vary from time to time. A few AMCs may charge you 0.50%, some other might charge you 0.70%, but it will remain maximum up to 1%. Okay, Rahul, understood that. What are the other charges in addition to the expense ratio? So I did some calculations. So if you look at my screen, you will see that if you trade around 1 lakh rupees of gold ETFs, you are likely to pay around 18 rupees of charges. And the breakdown of that is something like this. There is a brokerage charge and exchange turnover fee. These two charges are dependent on the broker that you use, but remaining other charges, for example, SEBI turnover fee, stamp duty, GST, are not varying depending on the broker that you use to buy and sell. there is no STT charges. So the transaction tax, which is STT, is zero in case of gold ETFs. So in nutshell, if you want to do a transaction of around 1 lakh of gold ETFs, you're likely to pay somewhere around 18 rupees of charges. Next question you might have is that, Rahul, what are the capital gain tax implications in case of the gold ETFs? So this is very, very simple. Post budget, the new rules are something like this. If you hold gold ETFs for more than 12 months, then it will be qualified as the long-term capital gain. If you hold it for less than 12 months, then it will qualify it to be short-term capital gain. So short-term capital gain tax will be taxed as per your slab, but long-term capital gain tax will be taxed at 12.5% without indexation. Let's take an example. Let's say you buy the gold ETF today. After 2 years, you sell the gold ETF. How much tax will you need to pay? Let's say you bought the gold ETF at 100 rupees. You sell it at 150 rupees after 2 years. The 50 rupees of the capital gain that you earned is called the long-term capital gain. On this 50 rupees, you will have to pay 12.5%. Now there is no indexation benefit that you are likely to get. What are the indexation benefit? That you can lower this 50 rupees profit for the inflation to factor in. But in case of gold ETF, government has now removed the indexation benefit because they have lowered the capital gain tax from 20% to 12.5%. So overall, if you have to think about long-term capital gain tax, you have to think about whatever price appreciation you are going to get out of that, 12.5% is going to go in government's pocket. If it is short term, which is less than 12 months, then you have to pay the tax as per your income tax slab. I've shared a lot of details about gold ETFs in this video, but I'm sure you may have more questions. Please write them in the comments and I'll try to answer as many of those questions as humanly possible. With that, I hope you liked this video. If you did, hit the like button. Let me know in the comments a simple thank you. It will motivate me to come up with such content for you at zero cost. With that, I'll see you in my next video. Until then, keep rocking.